It's not fair. Not only am I locked indoors, but I'm not able to enjoy my normal lifestyle entertainment. And now I can't even enjoy the theatre and the fun, the street theatre of my weekend entertainment property auctions. I've always thought auctions are a bit like watching buskers, a bit of street theatre, getting the crowd all excited. But I've also found them a great way to buy properties because of their transparency. It's a great way to sell properties because of the immediacy. You've got a deadline date and all the interested buyers are herded together to give their best offers. And of course, auctions have always been a great real-time, in-time measure of what's happening, especially in our two big property markets, Melbourne and Sydney. But all that's changed, hasn't it? So to discuss what's happening in our property markets at the moment, what vendor sentiment is at the moment, and what auction clearance rates that are currently being reported really mean, let's have a chat with Australia's leading housing economist, Dr. Andrew Wilson, Chief Economist of myhousingmarket.com.au. Welcome, Andrew.
G'day, Michael.
Now, Andrew, you recently started your new home listing index to give us an indication of vendor sentiment, seller sentiment. You've been tracking it since the beginning of March when things started to change in the world. What's it been showing over the last week?
I guess it's important to understand what vendors, sellers are thinking in the marketplace under current circumstances. And we can look at, of course, aggregated listing numbers, and that's the number of properties that are on the market at any point of time. But I think what my index is showing us is the number of new listings that are coming into the market. If we look at aggregated listings, they don't really tell us anything in terms of the market dynamic. Homes on market can rise because of a flood of new listings coming into the market, or they could rise because properties aren't selling. So it can be a seller issue and a buyer issue. So we need to drill down and look at one of those elements, and that's the number of newly listed properties coming into the market. I have an index going back some time, but I commenced a national index from the 1st of March just to track the impact of the coronavirus lockdown on the housing market. The measure actually tracks on a daily basis the number of newly listed properties over the past week. And it's interesting, if we look at the latest results, Michael, what we're seeing is that there's a recovery in the index, which is not that surprising because the dip that we did see over the previous week's results was clearly influenced by the Easter break. But up until then, we had seen a reasonably consistent decline in the index number, but we are now starting to see that post-Easter recovery in new listings. So that's a positive sign for a seller sentiment, Michael, that we are starting to see seller numbers rise again. But when we look at the index or the numbers now over this week ending Monday compared to the same post-Easter period last year, new listings are still nearly 30% fewer than compared to the same period last year.
But even this time last year, after Easter last year, we had the spectre of an election coming up. So even at that stage, new listings were on the downside.
Well, that's right, Michael. And as well as the forthcoming election 12 months ago, we also had a period where the fear factor was certainly important in the marketplace from both buyers and sellers. A lot of the nonsensical predictions of price crashes last year were still quite current then in the minds of buyers and sellers, and they were sitting on the sidelines. So I guess if we take that into account, we can say that perhaps comparing it to the same period last year is not comparing it to a period we had at the beginning of March this year, when sellers were certainly rushing back into the market to take advantage of strong competition from buyers.
This is one index that we take into account to get an overview of what's happening to the property market. Another good one is asking prices, and that will, of course, in turn, in 60, 90 days, translate to selling prices. What are you finding with asking prices at the moment, Andrew?
In line with what has been a typical recovery from sellers post-Easter, we actually saw an increase in the median asking price of Sydney's, and that's taken on Monday compared to the previous Monday. That was up marginally. Other markets were down over the week, but probably we get a better indication of how prices are moving if we compare asking prices last Monday compared to where they were at the beginning of the coronavirus issue. And I've taken that back again to the beginning of March. And we can see that all our capital city markets, with the exception of Adelaide, have fallen away. Sydney's the underperformer there, where median asking prices are down by nearly 2% since the beginning of March. Other capital cities, not quite as severe, but certainly down. As the further we go, the more, because these numbers tend to be volatile, the more of an underlying trend we will get. I think that we'll see this will be quite reflective of the sale price data when it does come through.
One of the other indicators that in the past was valuable were auction clearance rates, but now a lot of properties are being withdrawn from auction. There's only a really small number that are these new virtual auctions. What's your sense of what's happening in the auction market?
We really can't read a lot into auction clearance rates as of published at the moment, because we're still seeing auctions that were listed pre-coronavirus issue. And of course, that's why we're seeing on a weekend to weekend basis still high numbers of withdrawals, because those withdrawals reflect vendors that have either switched to private treaty or those that have decided to wait and see in terms of their selling campaigns. As the next couple of weeks advance, we will see fewer numbers of withdrawals, because obviously people aren't listing their properties for auctions in the traditional sense because they can't. So we will see more of a reasonable clearance rate that we're used to, and not this corrupted clearance rate that we've had over recent weekends, which sadly but not surprisingly the media have recorded generally as being some sort of a cataclysmic fall. It's not. It reflects a fault in the methodology, and that fault is that withdrawals are counted as non-sales, the same as a passed in, because we don't know what's happened to those withdrawals, whether they've just been suspended or put into private sale. So it's ridiculous to actually count it as a result.
Now, in the chart we're seeing at the moment, you've also got amended clearance rates.
Yeah.
What are you counting in those figures, Andrew?
Well, that's just a basic clearance rate, Michael, which just shows us the number of sold and the number of passed in. We add those together as being the total market. And of course, we take the proportion of sold over that total market as the auction clearance rate. So we don't worry about withdrawals. It does show, and I think that's also interesting, the number of sold is still quite reasonable. 500 sold, reported sold in Melbourne last Saturday, 314 reported sold in Sydney. Now, those numbers, of course, include properties that were sold prior.
Well, there's lots happening in our world. It's changing, but the property markets haven't stopped. They haven't frozen. There clearly are still transactions, as you're showing, a smaller number, but there's no crash happening in the market as some are predicting. That's because there's no mortgagee sales, there's no forced sales at the moment. Discretionary buyers are stepping out, and those who are having a little bit of financial trouble are getting some support from the banks. So let's just see how things transpire by having our regular Property Insiders chat each week. Thank you for your time, Andrew.
Thank you, Michael. Thanks a lot.